This will be a once-in-a-generation opportunity to build wealth because now it could be one of the most accessible times to increase your net worth dramatically if you know what you're doing. You must have heard the news. If you haven't, then let me tell you more than 9 out of 10 CEOs are bracing for a recession. And 97% of CFOs are cutting costs by 10%. Even though this sounds negative, the fact is recessions happen regularly. If you use them correctly, you could set yourself up for the rest of your life through incredible opportunities and discounts. And after you have watched the video, make sure to start taking actions. Else you will waste your time. So let's get started. But before that, make sure to subscribe to Money Wealth Club, only if you want real value into your life. Let's discuss what is expected to happen throughout the next 12 to 24 months. What are the best benefits you can take advantage of today? And precisely what can you do to ensure you are in the best position to make as much money as possible? But first, we need to talk about the recession. Generally, recessions are followed by a significant rise in unemployment, a drop in wages, a loss in consumer confidence, and a decline in values across everything from stocks, food, energy, and services. Along with the recession usually comes a decrease in earnings. See, companies report the revenue every quarter and give guidance on their future outlook. But lately, they've been cutting forecasts, bracing for slow or negative growth, inciting recession risks at the highest pace in 10 years, which leads us to third layoffs. When consumers earn less, they spend less. And when companies see less demand, they begin to cut back on their expenses, with usually employees being fired first. As Bank of America explains, the U.S. economy will soon start losing 175,000 jobs per month. So let's go over what this will mean for you and your investments, and how you could use this information to make money. On number 1, we have stocks. All 3 major indexes are now down between 20 and 30%. If we look at history, since 1946, the average market drop was close to 30%, with the most severe being in 2009, when the S&P 500 fell 57% from the peak. Now, once you combine the average with the recession, the markets tend to do even worse, with an average drop of 34.8%. Right now, we're down about 25%. So the absolute bottom occurs when we see capitulation across investors. Usually, that is a time at the start of the recovery when things begin to bounce back. Now I'll tell you exactly how much you can make from this in the next few minutes. But first, we have to talk about number 2, which is real estate. Even though every area is different in some locations, some might continue to flourish. Housing declines which are on a national level are actually rare. In fact, throughout the last 60 years, there have only ever been a few times when prices meaningfully fell more than 10%. The general Wall Street consensus is that the national housing prices will decline 7%, with a worst-case decline of 10% to 15%. But should interest rates continue to increase? Of course, every market is going to be different. The most vulnerable markets could see upwards of a 25% decline from the peak, including parts of Florida, Arizona, Idaho, and Southern California, with the decline lasting another 12 to 18 months before bottoming out. So if you are looking to invest or buy a house, we may see some deals starting to come on the market, which we'll cover shortly because we have to also talk about option number 3, cash. Until now, there has been this mindset that cash is wasting away to inflation. But when every other asset is falling in price, sometimes cash can be the safest place to store your wealth. Till 2018, cash was the best performing asset. Cash is a significant part of the portfolio. Even fund managers are holding on to the highest amount of cash since 2001. And remember, cash is the only asset investors could use as a recession hedge. But what you could do about this to make money, and why so many people never take advantage of what's about to come, here's what you need to know. So why could this next recession be a once-in-a-generation opportunity? First, everything will become less expensive. Even though one might think this is the wrong time to invest, seeing everything is falling 30%, a wealthy person would see this as an opportunity to buy those companies for a 30% discount. So when stocks go down, and you can get more for your money, people don't like them. Firstly, reset your belief because a falling market can work to your advantage. Secondly, there's less competition, because when times are difficult, companies scale back and fold. And it opens the door for smaller, more aggressive companies to stand out and take their place. Thirdly, there are way more opportunities. See it like this. A recession is the market's method of plucking out the weak. This means that only the largest, most established companies can access all the resources. Once stocks have found their low, their average return the following year is 40%, and within 2 years, the market has increased an average of 58%. This means investing on the way down is much more profitable than pulling out of the market and waiting. The market has always recovered. Recessions are announced around a 6 to 12 month delay. So what can you do to make a profit? Before I tell you about the methods, give this video a thumbs up and stay tuned till the end. Number 1. Lower your expenses. You track your market, cut back on unnecessary spending, and operate lean while you continue reinvesting as much as possible into the market. Also include a plan on what you'll do if your income drops 20% to 50%. Number 2. Save some cash to fall back on. Even though your money is best off invested as soon as possible, there is something about the peace of mind of having cash on the sidelines just in case something happens. So you can make cash up anywhere between 15 and 20% of your portfolio, depending on the time of the year. Number 3. Protect your career. Protect your career because, at the end of the day, it will be your best option against whatever happens. Because financially, your worst fear should not be the market going down, but instead, the market going down at the same time you lose your job and have to sell off your investments at the bottom before they have time to recover. So improve yourself, learn new skills, and double down on your current work. Number 4. Invest long-term. Investing long-term is the best course of action. When it comes to investing, just simply carry on as usual and pretend like nothing's happening. Dollar cost averaging, or buying into the markets regularly, is the most profitable strategy. So stay in the market and continue buying in. Number 5. Diversify your investments. If you can't handle a 20% drop without panicking, it's probably a sign that you're invested too aggressively. So if you're in the US tech stocks, it's a good idea to add large caps and international stocks to the mix, or look into investing in real estate where rents tend to be more stable. This will add diversity to your investment and make your portfolio more robust. So these were the ways you can use recession in 2023 and some good money. Guys, stop dreaming and start executing your plans, and tell me in the comments section which one you're gonna start with, and let me add value to your plans. I hope you found the video helpful. Like and share it so others can benefit from it too. Subscribe to my channel to learn about more ways to make money online.